Welcome back to Tech Unpacked, the podcast where we dig into the tech stories that matter. I'm Mark, and I'm itching to talk about some seriously interesting developments today.
And I'm Jenny, ready to ask all the questions our listeners are thinking. Today, Mark, we're diving into Tuya Inc., a company that just dropped their annual report and, their first ever ESG report, which is kind of a big deal.
That's right, Jenny. Tuya filed its 2024 annual report on Form 20F with the SEC, and at the same time released their environmental, social, and governance report. This is a big deal for a global AI cloud platform service provider like them. It signals maturity, I think.
So let's start with the basics for those who might not be familiar. What exactly is a Form 20F, and why is it important, for us mere mortals?
Great question. Think of Form 20F as the annual report card for foreign companies listed on U.S. stock exchanges. It's a comprehensive document that lays out their financial performance, their business operations, any potential risks, and a whole lot more. It's critical for investors to understand how the company is doing and what potential challenges they face. It's basically required reading if you're looking to invest in a company like Tuya. It's their deep dive into themselves for everyone else.
Okay, that makes sense. And then they also released an ESG report. We hear a lot about ESG these days, but can you give us the quick rundown on what it means in this context, especially for a tech company?
Of course. ESG stands for Environmental, Social, and Governance. It's a framework companies use to show how they're being responsible in these three areas. Environment covers things like carbon footprint, energy use, supply chain sustainability. Social is about how they treat employees, their broader community impact, human rights, things like that. And governance is about the company's leadership, auditing practices, shareholder rights, transparency. Investors are increasingly using these reports to assess a company's long-term sustainability and ethical practices, not just their quarterly earnings.
So it's not just about the numbers anymore, it's about the bigger picture of how a company operates too. Let's get to those numbers though, Mark. What did Tuya's 2024 annual report tell us about their financial health?
Oh, Jenny, the numbers are good. For the full year 2024, Tuya reported total revenue was $298.6 million, and in Q4 alone, their revenue hit $82.1 million. That's up a solid 27.4% year over year. What really caught my eye, though, was the growth across their different segments. That's where the real story is, I think.
Segment growth? Tell me more. Don't leave me hanging.
All right. Their platform as a service, or PaaS, revenue was $59.3 million, up 25.7% year over year. SaaS, or software as a service, revenue hit $11.5 million. Up 21.1%. But the real star, the one that made me lean in, was their smart solution revenue. It soared to $11.3 million, a staggering increase of 45.5% year over year. That's considerable.
45%? Wow, that's a huge jump. What exactly are smart solutions in this context? Is it like smart toasters that talk to your fridge?
Well, sort of. While PaaS and SaaS are their core cloud platform offerings for developers to build IoT devices, think the underlying tech stack. Smart solutions are more integrated, often end-to-end applications. So it's not just the toaster but the whole smart breakfast system. Picture complete smart home systems, smart commercial solutions for logistics, building management, even construction sites. It signals a move towards providing more vertical, ready-to-deploy uses, rather than just the underlying platform components. They're building the infrastructure, but also the useful applications on top of it.
So they're not just providing the building blocks, they're starting to build the whole house, or the whole smart city, it sounds like. That 45% growth really does stand out. What about their gross margin? Were they profitable?
Their gross margin improved to 47.8%. Up from 47.3% in the previous year. That's a healthy sign, indicating better cost management or economies of scale as they grow. It's a slight bump, but in a tight market, every bit counts. And co-founder and CFO Alex Yang even confirmed these figures, saying for the full year 2024, they achieved total revenue of $298 million with that improved margin.
That's solid performance all around. And, a 0.5 percentage point increase in gross margin, while seemingly minor, could signify a few things. It could mean they're getting better deals from their suppliers, or improving their software efficiency. But it also begs the question, is that a sustainable improvement or a one-off? I mean, Alex Yang sounds happy, so that's good.
Right, exactly. It's a question for continued monitoring. But let's switch gears to the ESG report. Since this is their first one, what do we know about what it covers? Is it like just a checklist, or are they really leaning into it?
Yeah. Companies often put out their first ESG report to sort of check a box, especially if they're seeing increasing investor demand for it. It's a way of saying, hey, we're thinking about this. But, is there anything that suggests Tuya is going beyond just symbolism here?
Well, the press release highlighted that the report details their sustainability objectives, achievements, and progress made against goals for 2024. While we don't have the specific metrics or internal details right here and now, we can infer some key areas a company like Tuya would focus on as an AI cloud platform. The fact that they even put one out and linked it directly to their annual report suggests they're making a statement and signaling intent to investors.
Such as?
For environmental, they'd likely focus on green and low-carbon initiatives, especially concerning their data centers, which, consume a lot of energy, how they manage power, cooling, and potentially integrating renewable energy sources. On the social side, it would cover things like employee well-being, diversity, data privacy, and cybersecurity measures, which are crucial for a cloud platform dealing with so much user data. And governance would detail board structure, transparency, and accountability. The challenge, of course, with initial ESG reports is often the lack of really granular, verifiable data. It's a start, though.
It sounds like a comprehensive approach. Even if we don't have all the nitty-gritty details yet, it sounds good. It's a good first step towards greater transparency, for sure, which, by the way, is something investors are increasingly looking for. So, this might not be just about being good, but also good business, right?
Absolutely, Jenny. It shows a commitment that investors are definitely looking for. And speaking of the future, there's a strong hint at some exciting developments on the horizon for Tuya in 2025.
Spill the beans, Mark. Don't hold back. What's next for Tuya? Are they building AI robots for our homes?
They're expanding into AI agents. We're talking about things like a fitness cheerleader and a pet feeding assistant. It sounds like they're building out specialized SaaS offerings powered by AI that target specific consumer needs. This could open up entirely new revenue streams for them, especially if these are subscription-based services. Imagine a little AI voice that tells you to do one more rep or reminds you, politely, that your cat is giving you the stink eye because its bowl is empty. That's clever.
A pet feeding assistant? So my smart feeder will get even smarter and maybe guilt trip me if I'm late? That's interesting. And a fitness cheerleader sounds like a very motivating AI. This really shows how they're looking to apply their AIoT platform in practical, everyday scenarios beyond just, turning lights on and off. But it also makes me wonder about data privacy with such personal AI agents.
Exactly. It's a smart move to leverage their platform into higher margin, recurring revenue models. This kind of vertical expansion through AI agents, combined with their continued strong growth in core PaaS and those rocketing smart solutions, really sets them up for an interesting 2025. And let's not forget, their current valuation is around $2.3 billion. With that 35% annual revenue growth, the market seems to be betting on their execution strength and their ability to pivot into these new areas.
It sounds like Tuya is not just growing, but evolving into new areas. The timely filing of their annual report and the release of their first ESG report also speak volumes about their corporate governance and maturity. It builds trust, which is invaluable in the tech world. But I can't help but think about potential regulatory challenges, especially if they're dealing with more sensitive personal data through these new AI agents. Something to keep an eye on, for sure.
It absolutely does, Jenny. Compliance and transparency are foundational, and they're nailing it on that front, at least with the reports. All in all, Tuya seems to be on a strong trajectory, balancing robust financial performance with a growing commitment to corporate responsibility and innovative new AI-driven offerings. They're certainly one to watch.
A comprehensive picture indeed. Thanks, Mark, for unpacking all of that for us. It's clear Tuya is a company to keep an eye on, both for their financials and their broader impact.
My pleasure, Jenny. And thank you, our listeners, for tuning in to Tech Unpacked. We'll catch you next time with more insights from the ever-evolving world of technology.
Bye for now.